So this is an important video about supply becoming demand and demand becoming supply. I know support becomes resistance and resistance becomes support once we are above or below a level. But that is really not the case with the supply and demand trading strategy. Supply zone basically means that there's an imbalance of sell orders on a chart, and the demand zone basically means there's an imbalance of buy orders on a chart. So what does that mean? If we break above or below a zone, as you know from the past video, it just becomes invalid. It really doesn't become new demand or new supply. There are a couple of rules that I do follow, and these are the only exceptions once supply becomes demand or demand becomes supply. But it's also to keep in mind that these are lower probability trades since it's not actually a true imbalance. And it's also important to note that I really don't trade off of these levels. And if I do, it's either smaller size or just completely ignore them. I don't really scan for them. I don't chart for them. I don't really look for them because they don't really occur too often. So if you're someone who's trying to look for a new demand becoming supply or supply becoming demand, it's really not my cup of tea. I don't really trade these setups. I just kind of ignore them. But it's important for you to note this just to have something in the back of your mind with it, just in case you do see a setup, because there's two charts that I'm going to show you right now on how supply becomes demand. So supply only becomes demand if price gaps above the supply zone and does not trade inside the zone during regular trading hours. So if you're going to be talking about regular trading hours, it's basically when the market opens to the market close, 9:30 Eastern to 4 p.m. Eastern time, regular trading hours. And when you are charting these supply and demand zones, you're completely ignoring pre-market and after hours. So technically, when you do chart them, pre-market and after hours is off. Therefore, you're only going to be able to see the gaps, and you're not going to be able to see trading that happens, which caused the gap up. So supply only becomes demand if price gaps above the supply zone and does not trade inside the zone during regular trading hours. If you have pre-market on, obviously you're going to trade inside the zone because you're not going to really see the gap on the chart. You're going to see candlesticks that did make us gap up, but you're not going to see this gap right here. So what I do is, since I chart without pre-market on, this is a 3-hour supply zone on Amazon. As you can see here, we had a rally, a base, and then somewhat of a drop. Not the craziest drop, not the strongest reaction. So first off the bat, this is not really the strongest supply zone for the fact that this drop couldn't even take out the low of the previous candle. So right off the bat, not the strongest zone. The next day, we gapped up. Amazon gapped up, and that's the rule. Old supply only becomes demand if price gaps above the level and does not trade inside during regular trading hours. So we gapped up, and now this obviously becomes demand, and you want to see price pull back into this area and hold the bottom of the supply zone. If we bounce off the top of the supply zone, even better. But if we really want us to hold the bottom of the supply zone, and that most likely would be my stop loss if I were to take the trade. Now, if I go to an intraday chart, let's go to a 5-minute. And let's see the zone. You could turn pre-market on if you really want, if it confuses you without it. I'm on demand right now. So Amazon, here's the gap. If you have pre-market on, obviously you're going to see us trading inside of it. You're not going to see the gap up. That's why I take it off. We pulled back into the zone. As soon as we touched the zone, we tagged. Look at that volume. Heavy volume came through. It would have been kind of hard to get an entry here. So honestly, probably wouldn't have taken this trade. Like I said, I don't take these trades often. It's just something to keep in the back of your head and to be aware of, to not really look for old supply becoming new demand and old demand becoming new supply. Because I know I get a lot of questions like this, and I see a lot of charts in the Discord room. It's really not something I focus on. Your truest high probability trades are going to become from fresh demand levels and fresh supply levels when we rally or drop into the zone, not vice versa in this case. Now, another example is on Facebook. Let me turn pre-market off again. Let me see if I could find it. Actually, no, it was on Boeing. So Boeing, we had a 1-hour supply zone. We technically had a lot of supply zones. Let me see. Yeah, we had a 1 hour here. I think it actually was a 30-minute. Yeah, it was a 30-minute supply zone. So ignore the 1 hour label. We had a rally, a base, a drop. We missed it by maybe 7 or 5 cents in the afternoon when we rallied into the zone. So this is technically a fresh level. Then the next day, if I fast forward to price, without pre-market on, we gapped up. We opened up here at the 157 mark. So we didn't have this wick by the time we opened. Let me turn pre-market back on. Go to a 15-minute, I guess. Let's see. So we opened up, came into this demand zone, and bounced. If you're on a 15-minute chart, this actually created a base and candle followed by a rally. So inside the supply, we bounced off of the zone A, and point number B, we created a 15-minute demand zone inside the 1 hour supply zone. So that's technically, new demand forming inside of supply zone. So that could have been a trigger for your long position. But the point is that we came down, we gapped up above the supply zone, pulled back into the supply zone, and couldn't take it long because you could technically say it is a new demand zone, even though there's technically no buy order imbalance here. It's just something that I've seen over the years of trading when this has happened. Now, the next point, which also kind of leads into that Boeing, is that the one setup that I like to trade is when we have supply, but price is very strong inside of it. So I'm going to show you an example on the S&P in a couple seconds. So think about it. We have a supply zone. Price rallies inside the supply zone, but we're very strong. No signs of a sell-off, no signs of sellers stepping in. And then all of a sudden we base out inside of it and basically form new demand inside supply, which technically happened with Boeing here. So we form new demand inside supply, and you can take it long at a speculation inside the supply zone that new demand is actually going to form. And I'm going to show you the ES trade in 1 minute. Okay, so this is the ES chart. I'm just going to break this down as best as I can. This was on Friday. I'm going to break every demand and supply zone too, so you can get a better visual. So we had a 4-hour demand zone down here, which price bounced off of in pre-market before the market did open on Friday. So that was a 4-hour zone. And then I have a 3-hour zone labeled up here, which was a rally. We have our basing candle followed by the drop. So this is a 3-hour zone, but the important part here that I want to reiterate, which goes back into the setup that I like forming, and this is only long inside of supply. This is not short inside of demand. I don't care about it to the downside. Something about market psychology where I only like taking long trades inside supply. If we do base out and form this setup that I'm about to explain. But the point is that we had a 1-hour supply zone, which was a nice, very clean, drop, base, drop. This is a very clean 1-hour zone. It's almost like it's sandwiched in between these two candles that did drop. Nice 2 red aggressive candles. So this is a valid 1-hour supply zone, which at the time before price did trade inside of it was a pink supply zone. But going back to that setup that I like seeing, if you go to a 5-minute chart, we rallied inside the zone, and you could argue, this pink box is the 1-hour zone. You could argue we rejected the 3-hour once, twice, 3 times, whatever. And you could argue that we did break above the zone. So the past video said a zone becomes invalid once you do break above it. But in this case, if you didn't remove the chart or the zone, price came back inside of the zone, was consolidating inside a 6 or 7 point range. So consolidation means balanced out. It basically means market participants are agreeing on a price. Now keep in mind, we're inside of a supply zone. Inside supply zone basically should tell us that sellers are stepping in and price is going to reject. When we don't reject inside of a supply zone and we base out and consolidate, that's basically telling me that sellers are not ready and buyers are basically holding the stock up. So there's basically a balanced period where market participants are agreeing on price. So you could take it long. The ideal entry probably would have been this pullback, and once we started moving up, probably would have taken it long, once we broke above this high right here, putting my stop loss below this low, which also is confluent with the bottom of the supply zone, also confluent with a little bit of support. But this is out of speculation now that new demand is forming inside of supply. Going back to that strategy. And now if you work your way through the time frames, you would have seen a nice 2-hour zone, which was a rally, a base, a rally, inside the supply zone. So you could have taken that long at a speculation that new demand was forming inside of supply, which is obviously a bullish signal. So the main point here is that I want to see a supply zone basically hold value. I want bulls to basically bid inside of the zone, create value. They agree on price, and you could take it long at a speculation that a new demand zone is forming inside of supply, and basically that the supply zone is basically going to be invalid, which is what happened with Boeing here on a 15-minute time frame. Let me see. We had that nice demand that got created there. Same thing with the S&P. So that's what I look for with new supply and demand. I don't really look out for this much. Like I said, it's a lower probability type of trade. Your best setups are going to come from actual, drop-based drops, rally-based rallies, whatever the case may be. Any of the candlestick formations that we do look for, those are going to be your highest probability of trades. And you're kind of going against the strategy if you look for old supply becoming new demand. Do not think of it as, support becoming resistance. It's completely different. And I hope this helps some confusion that I get a lot of questions with these zones forming.